QuickBooks Pro Desktop 2021. Enter transaction for owner withdrawal or personal payment from the business checking account using bank feeds. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our bank feeds test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We have transferred information into our QuickBooks file from the bank and are practicing uploading banking information with it. We're now thinking about those transactions where we might have a withdrawal, the owner taking money out for personal use out of a business account, or possibly a transfer from the checking account to the personal account that we will see within the bank feeds as the money leaves. Or what happens if money comes out of the checking account we see in the bank feeds and it was for something personal, like personal meals or personal items that were purchased, whatever they may be? How do we treat those with regards to the bank feed transactions when we're entering them in the system? So to see this, let's open up our reports first. Reports drop down, company and financial. We'll open up the balance sheet. So let's open up the standard balance sheet and change the dates up top, customizing those dates from 01/01/20 to 12/31/20, and run, or say okay, running the report. And let's open up the P&L as well, the profit and loss. So there's the P&L will open up as well, which is going to be 01/01/20 to 12/31/20. So here is our information. Now going back to the balance sheet, obviously the checking account will go down because we're going to see a decrease from the checking account for some item that has been withdrawn, and it's going to be for personal use in some way, shape, or form. Ideally, what we would like to see, if this is going to be the business account, is when the owner takes money out, then they take it out in the format of a draw or a transfer that will be clearly recognized in the bank feeds, and then we can simply adjust and we can even save the transfer, the reoccurring transfer, as a transfer that's going to happen, and the other side will go to some type of equity account. It could either go into the equity account in owner's equity, the general equity account, or we can make another account called draws, and we can track the amount that the owner takes out. If it's a sole proprietor such as this, that it'll be easy. We can put it into the same account, even owner's equity. But if you have multiple, if it's a partnership, for example, then you got to make sure, of course, that you're tracking this by who is taking the draw out. You got to track it by partner. So those are kind of the options you have. Now, that's what we would like to see. Now, it's possible that it could be possible that the transfer happens. The transfer goes, like might have a monthly transfer going from the checking account to the owner that's just going to be taken out in the draws, and we could see that as a repetitive transaction. That would be great, not a problem. It's possible, however, that the owner is also making transactions for personal usages, like personal meals and personal items that are being purchased on the business account. That becomes more complex because it's harder for us to see. It's going to look like a business type of transaction. If they purchase meals, if they go to a restaurant for personal use, and it looks like we're going to have a question of, well, is that a business meal or is that going to be a personal meal? What do I do with that? Now, if we determine it's a personal item, if we're able to determine that fairly clearly, then we can do the same type of process. We can just say, okay, the money went out, and instead of me hitting something like meals and entertainment or some other expense account, we will simply put it into a draw, as if the money was taken out personally and then spent on the meals, which was what we would like to see. That would lower the confusion. But if the money was taken directly out and spent on meals that were personal or something like that, then as long as we can recognize that, then, which is a little bit more difficult to do, then we'll just record that purchase, which was in the business checking account, directly to, once again, either draws or the equity account, not categorizing it as meals or anything like that. Let's take a look at an example. I'm going to go to the banking dropdown. We're going to open up our bank feeds, bank feed center, opening up the bank feeds. We'll maximize the window here. I'm going to be into the unrecognized items, and I'm going to hit the cog to the right-hand side, and I want to look at all types. I want to have all these checked off and say okay, and then we can filter these items if we so choose. So if we use the filtering options, I want to basically see the checks. So I'm going to look at the checks, and I'm going to close the filtering options. And there we have it. So what we're going to look for, in this case, we're going to say these items that are these transfers, the $75 transfer. We're going to assume that we could set this up, and this could be a good system for a bookkeeping system. You can set up and say, hey, look, I'm going to automatically transfer possibly out of my business account so much that I need for personal use, probably more than $75 but you're going to transfer it out of the business account and put it into the personal account. And if you see that as a reoccurring transfer, then it'll be easy for us to pick up. We'll be seeing it here. It's going to be a transfer. It says reoccurring transfer. It's going to the other account, which we're going to assume here is the personal account. So that's what we like to see. Nice and clean, repetitive each month. I can copy this and make a rule for it, and it'll set up and be able to pick it up in future periods very easily. So let's see that method. We can say, okay, there's the check amount. It's going to go to the savings and the payee. We could put a payee of the owner or something like that, but it's really an other kind of item here. In other words, if I was to add the payee, it's not a vendor, customer, or employee. It's really other that we would put the owner, right? So it'd be owner name here, because the owner's the one that's taking the money out. So it's transferred from the checking account to the owner's personal account. Then the other side, we could simply be taking this to the equity account here, which would just be grouping the draws out of the equity account, and all income would roll into equity. QuickBooks generally sets up a nice draws account for us. That would be the other account that we would want. That would be calculating in a separate equity type account. Notice it's an equity type account, all the draws that have come out. So we can see all the draws over the lifetime of because this will never close out unless we close it out periodically for this individual. So I'm going to say draws there, and that's it. Now, if we wanted to make this a reoccurring item, we could hit the drop down and say we want to add more detail and make a rule related to it. I'm not going to do it right now because I want to like pretend the other one is a little bit different. So that the rule would be easy for us to make though, and so it'd be okay. And then set that up, and we'll add that and say yes. What happens on the books? If I go to the balance sheet, then we see that double clicking on the checking account, we will of course have that decrease that has now been included of that $75 decrease. And if I double click on that, it's going to be a check type of form, even though it was a transfer, because the check form is always going to be the form that's going to be used for a decrease. Just note there's no check number. So the expense, the other side's going to the draws. Even though it says expense category down here, note that this isn't an expense. Really, this thing should really say like account versus some other thing added to account, which would be like items, like inventory items, which would track things other than just the account, also the inventory. Closing this back out. The other side then is not going to the income statement, but to the balance sheet in equity, now having a new equity account being draws, tracking the money that the owner took out of the business then for personal use. Obviously, if we double click on that, we see the other side of it. Now, the key here is that you don't want to mistakenly put this on the income statement, because if you put it on the income statement, then like if we set it up as miscellaneous expense or something like that, then if it's on the income statement, it would be included in the expenses and would be decreasing then the net income amount here or here. And that wouldn't be proper, really. I mean, so you don't want the net income to be reflecting the money that went to the owner for personal use. The expenses here should only be expenses that were used in order to help generate revenue as the purpose of them. If it was used for personal use, then that's a personal expense that was used to help improve the life of the owner, which is on the personal income statement, not the business income statement. So that's going to be the idea there. Now, if we go back to the bank feeds, you might have situations that are more confusing than that, because if you're mixing up your personal expenditures and your business expenditures, it's possible you can kind of track that in the same file, but it's a little bit more confusing. It's a lot more easy to get mixed up. Let's pretend this other one, instead of it being a reoccurring transfer, said something like a restaurant here, or say it was to Disneyland or something like that, or say it was to Amazon for a purchase, but it happened to be personal. These types of things, we can set them up as a draw and do the similar kind of process, meaning instead of me putting this to an expense account, I'm going to record it to a draw. Even though it didn't go into the owner's checking account, it went for an expense. But it's a personal expense. Therefore, I'm not going to record it as an expense. I'm going to record it as a draw. Now, the reason you don't want to do that is because it gets quite confusing, because you could be purchasing from the same vendor. For example, I might be purchasing for Amazon which is a legitimate business expense, and then I might be purchasing from Amazon for personal use. If I'm doing that from the same checking account, when I then go in here and I try to figure out what's going to be a draw versus what is a legitimate business expense, it's confusing. So you don't want to do that, especially if you have someone else doing the books, because they are less likely to know what's going to be personal or not. I mean, obviously, as something said here, Disneyland, especially under the new tax rules where they kind of took out entertainment so much as a deductible component, they kind of re-upped the rules for taxes, then it would be fairly clear. I could say Disneyland doesn't seem like a business expense unless, you're in a particular type of industry, so I can probably assume there. But if you're purchasing something from, like the grocery store or something like that, you would think probably not a business expense, right? If you're purchasing something from Amazon, then maybe it's business expense. So it gets quite confusing to do that, especially if you're not the one that's actually making the expenditure. So what you want to do then is set up the transfer from the personal account to the business account, and then make sure you have separate credit cards and separate checking accounts. That would be the best thing to do, especially if you have someone else doing your bookkeeping. Also note, it is possible to use class tracking with your personal items. So you might say, hey, I want to track my personal items and I don't want to have 2 QuickBooks files. It's not advised really to do it in one QuickBooks file. You should probably have 2, but if you could do it in one file by turning on class tracking. And in class tracking, you can track 2 line items on the income statement, meaning one being the personal expenses and the other being the business expenses. So it's not a perfect system because you don't have the same thing on the balance sheet with class tracking, but that's one option you can look into. We have a course on that if you wanted to experiment with that. But in any case, let's assume this one was from something like a restaurant or something like that, and you determined it was personal. Well, you do the same thing to it. We would say, okay, it's going to go to the payee. I'm going to say the payee is going to go to the owner. So I'm not going to say the payee is going to basically go to the restaurant per se, because it's really, I'm imagining it kind of going to the owner, and then the owner paid the restaurant. That's basically what we're kind of imagining what happened, instead of it going directly to the restaurant, right? And then you would say the other account is going to go into owner's draws. Once again, even though we're imagining this situation being the case where the money didn't go directly to the owner, but the owner paid somebody for their personal use. So we're imagining we're recording it as if it went to the owner, and then the owner paid for the personal use, even though that's not really what happened. It went directly to the end use. But we get to the same end location for the purposes of the personal bookkeeping. If they want, again, for the business bookkeeping, if you want the personal bookkeeping, then you'd have to record the transactions as an expense for personal use, which you might group into restaurant expense or whatnot. But again, generally that would be in a separate QuickBooks file that would track the activity for personal use versus here business usage. For business usage, it's a draw in essence. So then we would just add the same kind of transaction. And again, will of course look the same. So if I go to the balance sheet, then it's going to be decreasing the checking account. So same transaction here, decreasing the checking account for the 75, but we're just imagining that it went to someone other than the owner, like a restaurant. And then the other side still going to draws here, recorded as a draw, and we're not recording any detail on what was actually spent on, assuming it was a restaurant or something like that. That's not for the business purposes books to do. It's for the personal books to do. So if you want to have tracking of that, you do that on the personal books then. And again, if you did want to use the same setup of books to track that, you could turn on class tracking. Like I could do it this way. And so you could say, I want to go to the edit drop-down preferences, and then we can go to the accounting up top, company preferences, and turn on class tracking. So I'm going to have class tracking, and then I would say okay. And so within the class tracking, you could then set up and say, okay, within this draws account, instead of having this second item, I'm going to say that we're going to say instead of it going to draws, I'm going to take it to meals or personal meals. And then I'm going to set that up. And you might want to indicate in the expense account that it's personal, even in the expense account and in the category. So you have kind of a double check on the personal versus the business. And then I can say that it's going to be an expense type of account. And then that's it. I'm going to say okay. And then I'm going to record in the class. I'm going to set up a class, which will be personal. And then I'm going to say okay. And then say save and close. And then when you go to the income statement now, I'm going to say okay. Now let's go to the profit and loss and update that. And I can do another profit and loss, a profit and loss by class, reports drop down. And you could go to company and financial. And I want to see a profit and loss by class now. And then I can say 01/01/20 to 12/31/20. And now you see personal and uncategorized, which is all business. And then down here, you see this item broken out in the personal side. So it's affecting basically a personal income statement, and then the business income statement, and then the total. So this isn't perfect because you can't do a profit and loss by class on the balance sheet. So it's not like a perfect system, but for the because it would all still roll into equity section. But if you just have a Schedule C type of business, then this might work for you for if you're a small company to get what you need to record the income activity for the current time period. Then everything rolls into the balance sheet as it is. And if you were to set something like this up, we do have a course on this, and so you can get into more detail on it. But just note, you would really want two classes, personal and then business. And then every transaction you enter, you would add a class of either personal or business. And then the unclassified items would go away once you classify everything. And then your income statement could be broken out by personal and business, kind of in the same QuickBooks file, which again is not the ideal or most recommended thing to do, but because you'd want separate files normally, but that takes more work. So that's another option that you can look into or think about.